Double entry accounting system? What are you talking about? As a beginner, this probably sounds very overwhelming. Join me in this short explanation of the double entry accounting system, and hopefully things start making a little bit more sense. First things first, we need to go back to the basics. Number one, in accounting, every transaction will always affect two accounts. Every action has a reaction, and nothing happens in isolation. Think of it this way. Assume you are a business owner and you deposit $1,000 into a business bank account for the business to start operating. When that happens, two things have happened. Number one, the business bank balance has increased with $1,000 because you've deposited $1,000 into the business bank account. Secondly, the business now owes the business owner $1,000 in return. Therefore, owner's equity has now also increased with $1,000. So this one transaction, the transaction of the deposit of $1,000 into the business bank account, has affected two accounts. Number one, the bank balance of the business has increased, and number two, the owner's equity of the business has now also increased. There are our two entries, and the beginning understanding of the double entry accounting system. However, to fully understand the double entry accounting system, we also have to start using words like debits and credits. The first thing beginners normally do is they make a big mistake here by assuming that debits equal bad and credits equal good. This is because people are used to looking at their bank balance or their bank statement, which they receive from the bank every month. The bank statement normally shows that you have a credit balance. In our minds, credit therefore equals good. But from a double entry accounting system, we need to be careful here. Debits do not always equal bad, and credits are not always equal to good things. We need to understand the effect of the double entry accounting system and our debits and credits by looking at the accounting equation. All you need to know for now is that for every transaction there is going to be at least one debit and one credit, and that your debits and credits should always balance out. As I said just now, to understand the double entry accounting system, we need to, number one, understand debits and credits. Number two, we also need to go and have a look at the accounting equation. The accounting equation is set up as follows. We have assets on the one side being equal to liabilities plus owner's equity. Assets represent the things that the business owns. Liabilities and owner's equity on the opposite side of the accounting equation are the things that the business owns. So two very different things. One important thing is that the double entry accounting system requires the accounting equation to always balance. So the one side of our equation must always be equal to the other side. Let's jump into a deeper look at the accounting equation. As I said, the accounting equation represents assets being equal to liabilities plus owner's equity. Assets, we said, are the things that the business owns. Examples of things that the business owns are things like our bank balance, in other words, cash, inventory that the business owns, buildings, land. Those are assets of the business. On the opposite side of the accounting equation, we have our liabilities and our owner's equity. Liabilities are the things that the business owes. These are things that the business owes to third parties. We also have owner's equity. Owner's equity is the things that the business owes to the business owners. Business owners are the owners of the entity. They have contributed towards the business and subsequently are owed funds back in return. Now that we've looked a little bit deeper into the elements of the accounting equation, it's time to pull everything together. We need to understand how debits and credits work together with the accounting equation to give us the double entry accounting system. First things first, assets which sit on the left-hand side of the accounting equation will always increase on the debit side of our general ledger. On the other side of the accounting equation, we have liabilities and owner's equity. They will increase on the opposite side. In other words, they will increase on the credit side of our general ledger. It's important to understand how debits and credits influence our different elements. understanding on which side our assets increase and decrease, and understanding how owners' equity and liabilities increase and decrease, so that we can understand the double entry accounting system perfectly. Let's move on to a basic example. You'll remember we spoke earlier about the business owner that deposited $1,000 into the business bank account. When he did that, what happened? The bank account increased with $1,000 and the owner's equity increased with $1,000. Remember that the bank account is an asset to the entity, and assets increase on the debit side. We therefore debit the bank account with $1,000. Owner's equity sitting on the opposite side of the accounting equation increases on the credit side. Because of this transaction, the entity owes more money back to the owner. Therefore, the owner's equity should increase on the credit side. And there we have our double entry, a debit to the bank balance and a credit to the owner's equity. Now that we've looked at our first example, let's just look at one more example to make sure we really understand. In this example, the entity acquires equipment at $5,000 cash. What has happened? Number one, the assets of the entity have increased because it's purchased equipment. So we will debit the equipment account, which is an asset account, on the debit side because assets increase on the debit side. The second leg of the transaction is that the bank balance of the entity has decreased. Remember that the bank balance is also an asset of the entity. Assets increase on the debit side but decrease on the credit side. So for the purposes of the bank account, we are going to credit the bank account with $5,000. And there we have our double entry accounting. What has happened? We have a debit to our equipment account, increasing our assets on the debit side with $5,000, and we have a credit to the bank account, decreasing the bank account with $5,000 on the credit side. And there we have it, the double entry accounting system. We now understand that for every debit, there will always be a credit, and that our debits and credits are linked to our accounting equation. If you enjoyed this video, please subscribe and join me for some more simple explanations of accounting.